सौरभ भी आए होंगे, इससे एक बार उनको भी उसमें ले लो पैनल में प्लीज।
ओके ओके ठीक है। नहीं आए नहीं अभी तक। ज्वाइन नहीं हुए लगते हैं।
आ जाएंगे, अभी मेरे पास मैसेज आया है, तब ले लेना थोड़ी देर में।
हाँ ठीक है ठीक है।
और आई थिंक नारायण जैन सर ने भी ज्वाइन करना है, तो उनका भी आया था, एक बार उनको भी देख लीजिएगा। ठीक है,
ठीक है, वो भी नहीं आया अभी तक, देखता हूँ आए तो ज्वाइन कर ऐड करता हूँ।
Yeah, Anuj, good evening.
श्रीवास्तव सर, गुड इवनिंग सर।
Good evening.
गुड इवनिंग सर, गुड इवनिंग।
Good evening, very good evening. अरे
अनुज जी
नमस्कार।
गुड इवनिंग सुमित सर।
नमस्कार नमस्कार।
सर एक बार वेज साइड से चेक कर लीजिए प्लीज सर। श्रीवास्तव सर,
हाँ पूछो।
प्लीज एक बार चेक कर लीजिए।
हाँ एक क्वेश्चन।
अनुज भाई मेरी आवाज जा रही है?
हाँ सुमित जी, यू आर वेरी वेल ऑडिबल, क्लियरली ऑडिबल।
ओके थैंक यू थैंक यू।
सर दिल्ली में हमने कॉन्फ्रेंस रखी है 13th की, तभी आप 13th
हाँ सर ज्वाइन करिए। ओके।
13 को मैंने देखा है राजेंद्र प्लेस में आपने रखा है।
करें जैन साहब ज्वाइन कर रहे हैं। हाँ
With your liberty, can I leave in 15-20 minutes? I have some. I got.
अभी तुम शुरू करने में। हाँ ठीक है
ठीक है, in 15-20 minutes.
एक मिनट
Just
जैन साहब क्या कह रहे हैं?
After well,
एक मिनट। हाँ जी सर। हाँ रिकॉर्डिंग में से करते हैं तो करते तो हैं।
email पे आया होगा सर, उनको बोलिए email पे लिंक आया हुआ है।
शेयर नहीं करेंगे, शेयर करनी है। हाँ रिकॉर्डिंग करते हैं हम। हाँ नहीं रिकॉर्डिंग करते हैं। रिकॉर्डिंग
ईमेल पे आया होगा लिंक सर, उनको बता दीजिए ईमेल पे लिंक आया हुआ है सर को। श्रीवास्तव को बता दीजिए ईमेल पे लिंक आया हुआ है।
वो अच्छा बोल देता हूँ। नहीं वो जैन साहब पूछ रहे हैं कि रिकॉर्डिंग करेंगे ना, तो रिकॉर्डिंग बाद में वो शायद शेयर करना चाहते हैं।
हाँ रिकॉर्डिंग होती है सर।
तो वो लिंक मैं बता देता हूँ, देखता हूँ कि वो अगर वो आते हैं, नहीं तो फिर मैं उनको दोबारा कह देता हूँ। कह दिया था कल मैंने कि भाई ईमेल पे आपको लिंक भेजेंगे, उसके लिए चाहिए। कर रही है 96, 97 सैकड़ा होने वाला है।
We already reached a number of around 100. People are still joining, sir.
People will be joining. अभी तो आकाश अखिलेश भी आ गए हैं। वैसे अनुज इसके बारे में बाद में बात करूंगा तुमसे। समथिंग टू बी ब्लॉक्ड। अखिलेश से भी बात करनी है, अखिलेश से मिलके। चलो अखिलेश से बात कर लूंगा पहले। हो गया 100 तो हो गए हैं, 101। खोल लो। हाँ बना दो।
Ved Jain sir has joined.
CA Vinay Jain जी 19 group और CA Vinay Jain।
हाँ जी विनय जी। तो हाँ वेबिनार क्या हुआ? आपको क्या आपके किस इंप्रेशन में थे?
हाँ जी
हाँ वेबिनार है ना।
हाँ अच्छी बात है।
देखता हूँ मैं उनको
ज्वाइन करो।
आपको इधर
रवि को बोल
पैनलिस्ट में आपको कहता हूँ।
हाँ बिल्कुल ज्वाइन करो। मैं उसको रवि को बोल देता हूँ, आपको पैनल पे ले लेंगे ना।
हाँ वो
डिक्लाइन कर रहे सर।
हाँ जी सर
ठीक है ओके।
अनुज जो
सर वो डिक्लाइन कर रहे हैं।
विनय जैन है।
रवि विनय जैन जी कोई बात विनय जी
उनको पैनलिस्ट में ले लो।
एनपी जैन ज्वाइन कर रहे हैं, उनको भी पैनल पे ले लो। बोल दो।
वो भी हाँ जैन साहब भी थोड़ी देर में ज्वाइन करेंगे।
जैन सर नारायण जैन सर डिक्लाइन कर रहे हैं और दूसरा नाम क्या बोले? विनय जैन।
विनय जैन
मैं ज्वाइन करती हूँ।
गुड इवनिंग।
गुड इवनिंग
गुड इवनिंग।
हाँ वो आपने उनको विनय को शेयर किया होगा ना, विनय जैन से, तो उनका भी वो कह रहे थे कि ठीक है। मैंने कहा उनको भी एज ए पैनलिस्ट अपग्रेड कर देते हैं, तो एज ए पैनलिस्ट आ जाएंगे।
गुड इवनिंग वेद सर।
गुड इवनिंग
हाँ जी गुड इवनिंग जैन साहब।
गुड इवनिंग सर। गुड इवनिंग अनुज जी।
ओ हमारे अच्छा विनय आ गए। विनय जी गुड इवनिंग।
सर एकदम फर्स्ट क्लास।
आप बाथरूम जाके जरा कॉम लेके आओ।
जैन साहब शुक्र है आज आपको टाई के लिए नहीं अभी बोल रहे हैं, बताइए
वेबिनार में मैंने टाई लगा का है वो।
नहीं वो
आज ईद है ना, इसलिए
एनपी जैन साहब को उसमें कर लेना।
सर कैन वी स्टार्ट नाउ?
को भेज दो इनको।
आप वेबिनार करते हैं, इसको सबको आपकी फोटो नहीं आने देते स्पीकर को जो
नारायण जैन सर वेलकम।
नारायण जैन साहब वेलकम। गुड इवनिंग।
जैन साहब नमस्कार।
इन सबको अलाउ कर दो ना, जबकि जितने भी लोग आए हुए हैं आपके पास कैपेसिटी है इसकी।
जैन साहब ये प्रेडोमिनेंटली जेंट्स कॉन्फ्रेंस हो गई है। विनय जैन, वेद जैन, नारायण जैन
और शिवराज सर आपने पीछे जो अमेरिकन पुल लगा रखा है इसको हटा दो। आप
Srivastava sir, can we start now? No?
Yes, let us start.
Good evening, respected with sir, Speaker, Chairman of Direct Tax Committee, Shri VP Gupta sir, A.K. Srivastava sir, National Vice President, Narayan Jain sir, past President of AFTP, and dear senior members, dear professional colleagues, on behalf of AFTP North Zone, I warmly welcome all of you to today's webinar on the topic reassessment under income tax. As AFTP completes its 50 glorious years with vision of ethics, education, and excellence, we continue to organize such webinars for the benefit of our tax professionals and members. It is really encouraging to see such an active participation from all of you. This is our 10th webinar in the year 2026. We have already organized 4 conferences, and the 5th conference we are going to organize on 13th June at JP Hotel, which would be graced by Shri Mahavir Singh Ji, Vice President, Honorable ITAT as Chief Guest, and renowned speakers Grish Oja sir, J.K. Mittal sir, Ashok Batra sir would be deliberating. I personally request all the members present over here to please register for the conference on 13 June. I sincerely thanks Direct Tax Study Circle Committee, Shri VP Gupta sir, Shri A.K. Srivastava sir, and all other office bearers and team members for their hard work in organizing these programs. Today's topic is reassessment proceedings. Reassessment proceedings are very important in today's tax practice, and we are privileged to have with us Advocate C.A. Ved Jain sir from Delhi as today's speaker. Sir is respected in the field of taxation and known for his vast knowledge and experience. We are thankful to him for joining us and sharing his valuable insights. I once again welcome our esteemed speaker and all participants to this webinar. Thank you very much. Jai Hind, Jai Bharat. Over to Direct Tax Committee Chairman Shri VP Gupta sir, please.
Thank you, Anuj. Good evening. Good evening to all. I welcome Ved Jain sir, Narayan Jain, our past president, and Mr. A.K. Srivastava, Vice President, North Zone, AFTP, and all other delegates, attendees in this Zoom meeting. As mentioned, that this is the 10th Zoom meeting which has been organized. Now, today's topic is very important. The topic is the reassessment under the provisions of Income Tax Act. And as we all know, reassessment has been very important topic from very beginning, and most substantial litigation under the Income Tax Act has been relating to the reassessment. And the old leading case has been the Calcutta discount 41 ITR, which laid down various legal propositions in this regard. And after that, lot of case law, any ITR you may pick up more than 10-15 cases you will find on reassessment itself. And after that, there has been a judgment of the GK Drive Shaft, which provided certain basis that the assessing officer should provide the regions and the pass a speaking order and all that. So that this is judgment of the Supreme Court was passed in 2003. But the government took a very long time to bring that law laid down by the Supreme Court in the statute. And in 2021, this law was amended under the Income Tax Act. And after that, lot of litigation had gone into, and the leading cases have been the Ashish Agarwal, Rajiv Bansal and all that. And again, there has been amendment in 2024. And again, there has been controversy regarding FAO and JAO, and amendment has been brought in 2026 with retrospective effect. So what I want to say that this has been always a very important topic under the Income Tax Act. And Mr. Ved Jain has been associated at all levels under the in regard to this litigation, and he has been part of all litigation which happened before the Supreme Court, Ashish Agarwal, Rajiv Bansal and all that. So we could not find a better person to speak on this topic. Therefore, we requested Mr. Ved Jain, and we are glad that he accepted our request, and he is here today in this Zoom meeting to address us. So before Mr. Ved Jain take over, I'll request Mr. N.P. Jain, our past president, to say a few words, and then Mr. A.K. Srivastava can introduce Mr. Ved Jain, and then Mr. Ved Jain can take over. May I request Mr. N.P. Jain, please? Narayan Prasad Jain, our past president of AFTP.
Thank you, VP Gupta ji. Today, I have come to this webinar to listen to the respected CA Ved Jain ji, and the North Zone is doing very well. My congratulations to VP Gupta ji for his able guidance, and Anuj Bhai, A.K. Srivastava ji, and you are doing a good job. Whenever I find time and the issues related to direct tax, I've been joining, and I will keep on joining. I will not take much of a time because I would like to listen to CA Ved Jain, advocate come CA Ved Jain ji. Thank you very much.
May I request Mr. A.K. Srivastava, please introduce Mr. Ved Jain?
Good evening, friends, and thank you, VPG, for now letting me speak. So in the Federation, we have the motto of Federation's motto is Triple E: Education, Ethics, and Excellence. Keeping this in mind, we have been in the process of holding programs from time to time, and in North Zone, we have two study circles, one on direct tax and one on indirect taxes, in which we hold a meeting every month. The attempt is to educate or share with the fellow members about the developments in law, and also to resolve the issues that they may come across in their practice. Today's program is in the month of May, that is the fifth month of the year, and this is the fifth program on direct taxes. We had four lectures earlier, and they were all very well attended. They are all very relevant topics. And today's topic, when we were to decide, was either whether we go for 25 Act or we go for something which the members are grappling with. And it was virtually we decided that we will have the issues in which the members have issues. And we couldn't find a person better than Mr. Ved Jain. And just to share with you, the program was already slated for tomorrow. But Ved Jain had some personal program tomorrow which had come up. So he requested that if we can change the date. And to our, in fact, he asked if we can cancel it. But to my request, he agreed that, okay, he will prepone it. He will prepone it. And that's why instead of 29th, we are holding this program on 28th, that's a Thursday. Generally, we hold it on Friday. Well, Mr. VP Gupta has already said a few words about the subject. This is a reassessment is a never-ending litigation issue, not only from the jurisprudence point of view, but also the statutory amendments are there from time to time. And the government has, or on behalf of the government, it is being stated in the Supreme Court many a time that, well, so much of revenue is involved, so many cases are involved, and persuading Supreme Court to exercise its extraordinary powers under 142, Article 142, to go beyond something which was even not there in the prayer of the department. And as said by Gupta ji, Mr. Ved Jain has been associated with this right from the High Court to the Supreme Court in all the matters, and we had earlier also heard him in an IT-80 bar program on reassessment, along with a couple of other councils who were attended. Now, coming to introduction of Ved Jain, I don't think Mr. Jain the audience requires any attendance, because Jain is such a popular figure, a towering figure in the provision of accountancy and tax, that anyone who has done anything on or has some depth in tax would know Mr. Ved Jain. Just briefly, I would say that Mr. Ved Jain has been a triple graduate, then he's a law graduate, and he has been the past president of the institute. And for last couple of some years, he gave up his certificate of practice and is practicing as an advocate. That's why, and he could go to the High Court and Supreme Court, and the depth of knowledge that he has, not only on the tax but also on the economic aspects. I often listen to him when the finance bill is presented, that economic aspects that he deals with are something which is mind-boggling. That he has in-depth knowledge on the economic part also, economic, and then he can talk about that why, and has a rationale behind the amendments that are being brought in by the government through finance bill or the economic policy that we have. I think I'll have to go cut short there and straight away request Mr. Vajan to take up the topic. Thank you, sir.
May I now request Vijayji to take up this matter? And after you finish, in between, any member having any question may note down the question. The chat box may put the question, and at the end there will be. I'll request Mr. Jain to kindly answer the questions. Questions will be read by Shilpa Gupta, who is the cook and convener to this study circle meetings. And so I'll request your kindly start. Take over.
Thank you, Gupta ji. Thank you, Srivastava Sahab, and Honorable Past President Narayan Jain Sahab, and Saurabh ji. I can see, and Anuj was there, and Vinay Jain ji is here, and all my dear friends, colleagues, brothers, and sisters. It's a great honor for me for being invited to talk at a meeting and a webinar being organized by the All India Federation of Tax Practitioners, Northern Zone. I can hear, I can see V. Gupta ji and Anuj ji and Srivastava Sahab doing a wonderful job persuading speakers, inviting people, organizing meeting programs, enlightening members on the various issues on tax issues. All India Federation has been quite old and very active federation on the tax issues. And it's always a privilege to be part of this type of a seminar webinar and to share the views on that part of the issues. Friends, today's topic is a topic on reassessment. And reassessment has become past 5 years. As my experience in the tax for the last almost now 50 years, I have seen it that I have never seen such vigorous, I think, activation on part of the revenue and such vigorous resistance from the taxpayers on the issue of the reassessment. We all, I think, being tax practitioners, are aware of the way back when normal scrutiny notices used to be issued. There was a period, I believe, pre-80s, by early part of 90s, it is, when every first assessment used to be a scrutiny assessment. And thereafter, it started the process of some selective scrutiny assessment by draft lots, etc. Or then thereafter, this computer-aided selective scrutiny schemes came up. And reassessment was only an exception. Earlier, the period was allowed to the department to issue 143(2) notice was quite big. It used to be 2 years, then reduced to 1 year, then reduced to 6 months, and now reduced to 3 months. Reassessment in very rare cases used to be a notice coming up, assessing officer recording reasons, asking you to file the return. You are filing return, then file objections and getting disposed of. And my experience in High Court, which I think now is almost 15 years, I joined High Court, or started coming to the High Court in 2011. And it used to be very rare cases that it used to come about 148 reopening, because the number of cases being reopened were very, very few only cases only issued. But as I see in last 5 years, I believe, thanks to the amendment made in the Section 147 to 151, and at the same time computerization, using the data AIR or SAS, all of that information. Now, I believe reassessment is a norm, assessment is an exception. Number of cases getting selected in scrutiny under cash are exception, but reassessment is a norm. As and when any information travel to the department, 148 notice comes up on the table on the issues. One of the reason I say was this, the data been coming to the revenue, and the second is the amendment which was made by the Finance Act 2021 when COVID was at the peak, and the way the procedure was changed and the way that extension was granted, it opened up a Pandora box for everyone, revenue, taxpayer, and the tax practitioners. You would have heard ASG making observation in the Supreme Court when Ashish Agarwal was being discussed, 93,000 cases, when Rajiv Bansal was being taken up, saying again more than 1 lakh cases, and recently when Jao Fao versus coming up, he made a statement, government revenue of more than 15 lakh crore rupees is involved in this reassessment procedure. Now, this has posed a challenge to all of us as a practitioner also, because as I see, assessment, the revenue has a right to select the case for scrutiny and tell, yes, I want to have a scrutiny of this assessment. Nobody can raise any issue. I believe 143 notices by and large are not challenged, except when the notices are delayed or something like is there. Or otherwise, there is no challenge, and assessing officer is well within the right to say that I want to scrutinize the return. But when reassessment comes up, the larger issue is because the allegation is that income has escaped assessment. And this cannot be a substitute for an assessment. Reassessment is with an allegation that income has escaped assessment. And primary onus is on the revenue, on the assessing officer to lead evidence and to come out with the prima facie facts, which for a common man of a similar knowledge and intelligence can have a reasonable basis to assume that yes, your income has escaped assessment. I believe before 1st April 2021, this was very well structured in section 147. When an assessing officer has reason to believe that income has escaped assessment, and then he can reopen the assessment, issue notice 148 after recording the reason, taking a valid approval, whatever it is what required. And there were time-tested judgment from Supreme Court on various issues. What is the meaning of reason to believe? It cannot be reason to doubt, reason to suspect. It should be a reason which is balanced and which one can understand, yes, there is a negation prima facie. There was judgment both in favor of the revenue, both in favor of the assessee. Yes, what is the meaning of the reason to believe, and enough jurisprudence was there. But the scenario changed from the 1st April 2021. And what has happened is from 1st April 2021, today we are, if I assume 31st March 26, if not more, at least 4 times this mechanism has been changed, which itself is creating too much uncertainty, too much problem on the issue, what is the meaning, etc. on that issues. I would just like you to take you to various provisions, and then I will come to the various issues arising. If you allow me to share the screen, let me just share the section wise. I just want to go on that part. Can you see this presentation?
Yes, sir. We can easily see this.
You can see this slides?
Yes, sir. Yes, sir. Yes, sir.
It can be,
clear?
yes, it's visible. It is visible now.
Now, what I have done is on the left-hand side is old section, and right side is the new section under the Income Tax Act 2025. But I will say that by and large, the right side is exactly what the left side is there. Only assessment year getting to tax years. I will just talk about wherever it is required to make some presentation or some clarification on that part. If you look at this right side of the section 147, if any income chargeable to tax in the case of an assessee has escaped assessment for any assessment year, assessing officer may, subject to the provision, assess or reassess the income on the issue. Very simple. If any income chargeable to tax has escaped assessment, there can be no doubt, yes, to do it. And then the explanation comes up for the purposes of assessment or reassessment or recomputation under this section, or assessing officer may assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of proceeding under this section, irrespective of the fact provision of section 148 have not been complied. This explanation by and large is exactly the explanation which was there earlier in 147. But this section, if any income has a chargeable to tax, there is a change on that part. And then if you look at this is 147A will come later on when Jao we will talk it out. Now this laid down because when what we were reading here, income chargeable to tax has escaped assessment. Now what has escaped assessment has now been explained in section 148. And what it says is, before making assessment, reassessment or recomputation under section 147, the assessing officer shall, subject to the provision of section 148, issue notice. This can be left it out. Now if you go a little down, this is the explanation which has been given where the income has escaped assessment. For the purpose of this section and 148, the information with assessing officer suggests that income chargeable to tax has assessment means. Now these are the 6 challenges, because now it has been now tabulated that under these 6 circumstances, there is an information which has escaped, which suggests that income has escaped assessment, and which gives jurisdiction to the assessing officer to issue 148 notice, of course subject to 148A procedure. Now what are these 6? Any information in the case of the assessee for the relevant assessment year in accordance with the risk management strategy formulated by the board from time to time. Now this is the biggest challenge. I believe in case a policy has been formed by the risk management strategy, ideally it should be a scrutiny that we believe that this type of cases need to be verified, then there can be a scrutiny. But to say that any information in the case of assessee where in accordance with the risk management strategy, I believe that cannot be and should not be a ground for what we call making a reassessment. Reassessment you can initiate only when you have prima facie material to show income has escaped assessment. But I will give a credit to the revenue also. They say that this is only for the purpose of issuing 148A notice, one notice, and you are entitled to send a reply. And if we are satisfied, then we will not go ahead with this. But the experience says this is by and large a formality. Once a 148A1 notice comes up, I believe all my friends which are sitting here will endorse the view that if not more than 80 to 90% cases, 148A3 notice order is passed against, and 148 notice comes up on the table. So this cannot be, I believe, in my opinion per se, cannot be a ground for issuing 148 notice. It can at best be 143(2) notice. Second is any audit objection to the fact that assessment has not been made in accordance with the provision of the Act. I appreciate that this can be one of the grounds that is not in accordance with the provision of that. One can look into that. Of course, any information received in an agreement referred to in section 90 or 90A. Again, I believe this cannot be per se ground for reopening. Of course, subject to 148A, you are again verifying it. Information may come, I have made an investment outside India, I have an LRS. Why that should be a ground for issuing 148A or 148? If you believe you must have material, yes, this information indicate that you have not disclosed or this is not added in your income, then on can be ground. Any information made available to the assessing officer under the scheme notified under section 135A, so much information get uploaded under the various this AIR etc. and the 285BA provision where assessee is required to submit the information. 133(6) you collect information on that basis. Now on that basis, again you have to make a prima facie view at your end. Any information which require action in consequence of the order of a tribunal or a court. Yes, assessing officer on the basis of any order or court passed, thereafter he looks into that and then he found out that in year return there is some challenge, he can of course issue. And then any information case of assessee emanating from a survey, yes, you have very well right to do that on that. Now, these were the 6 category of cases under the 1961 Act applicable till 31st March 2026. Now you see on the right hand side, Right hand side, there are, I say 6 S's, but G and H have also been added. And G, H and all, any direction in the case of an SSC given by the panel under section 274(6). Now, this is basically a GAR issue where the issue is coming about. Any finding or direction contained in an order passed by an authority, tribunal, or court in any proceeding under this act by way of appeal, reference, or revision. This is an additional ground added where the assessing officer shall be deemed to have information that income has escaped assessment, and then he can issue 148A notice. Only 2 cases where he is not required to issue 148A proceeding is the information which is made available under the scheme of 135A. Then he is not required, because then in that case, with approval, he can open up the straightaway on that issue on that part. Now, having said so, when information come to him, now this is the procedure which he has to follow. This is 148A. Some of my friends will be knowing that earlier there used to be 148A, B, C, D, and A mandated that assessing officer will verify the information at his end, and thereafter, after verification, he will carry out the exercise and issue a notice of B. Now that A, 148A has been deleted, and this 148 away, straight away the assessing officer will issue a notice. If I read it out, where the assessing officer has information which suggests that income chargeable to tax has escaped assessment, in the case of an SSC for the relevant assessment year, he shall, before issuing any notice under section, provide an opportunity of being heard to such assessee by serving upon him a notice to show cause why a notice under section 148 should not be issued. Such notice to show cause shall be accompanied by the information suggested income chargeable to. Now, what is being projected is that by deleting that clause, that whereby assessing officer himself was required to examine the information, I believe that's not a good for the purpose of equity. Assessing officer need to look into the information, need to look into the return, and should make a prima facie view that yes, it is a case for issue of a 148AB notice, which means that he has got something up his sleeve which indicate yes, which meets the requirement of a reassessment to income escaping assessment. But now it is not there. It only states that in case he did, he will issue a notice to you, giving an opportunity of being heard. Of being heard here will not mean that you will have an opportunity of a personal hearing. All you will have is a notice, and you can reply it only online or by post, whatever it is, maybe the case, in case it is there. And the second part is that assessing officer shall give the information which suggests he has to provide the information which he has up his sleeves, on the basis of which he is saying that income has escaped information. Now, we must try to read the word which have been used, because there are 2 words which will come in later on, 148A3 and 1.1. Here is he need to provide information. It is not saying that he need to provide the material. Now, if you look at this section 3, what he says, the assessing officer shall, on the basis of the material available on record and taking into account the reply. Now, there is I think difference of opinion on these 2 words, because accompanied by information and then saying on the basis of the material available. What happens that assessing officer just gives a prima facie information. He does not provide you the entire material. You submit the reply, or later on he uses the other material available with him against the assessor and says that it is a fit case. I believe objective was not this. Though the words used is information and the material, if we make out a difference, that there is a difference between the information and the material, an assessing officer, despite having the material, doesn't share the same and uses that material against the assessee, we are defeating the very, very objective of introducing this new scheme, which was to overcome, which has happened earlier, the GK and tribe shaft. GK and tribe shaft said the assessing officer was not providing, he was recording reason, issuing 148, and later on challenge being made. Then the problem was coming up. Then they said, no, we will provide you everything what we have. I believe the right course, I will assume, and the interpretation should be whatever the information assessing officer and material he had, on the basis of which he is coming and issuing a notice, that need to be provided to the assessee, and the material available here will mean what has been provided. I can appreciate any information or material coming after issue of 148A1 notice, but in case it was with the assessing officer and he has not given to the assessee, obviously the reply which is required to be submitted in response to this notice will not be complete, since the assessee does not have the information knowledge what is against him. He need to be provided absolutely all material which is available in Sudan. Now, this is the procedure which has to be followed by the assessing officer, not hard meaning you only reply, on receipt of reply he will consider, etc. And para 4 says that, as I said, that this procedure need not be followed when 135A is so and so and so, but he need to take an approval from the authority. Now, a significant amendment has been introduced, which I said there are 2 things which more have been added. The SSC has received assessing officer received direction from the approving panel, or income escapement has pursuant to any finding or direction, which I will talk to you later on that part, on that issue. Now, going back on the issue after doing this exercise, now what he has to do, he has to issue a 148 notice. Now, if you look at this, before making assessment, reassessment, recomputation, under section 147, the assessing officer shall, subject to the provision of section 148A, issue a notice to the assessee. Meaning thereby, before making assessment, he need to issue a 148 notice, require him to furnish within such period as may be specified in the notice, not being less than 30 days from the date of such notice, but not exceeding 3 months from the end of the month in which such notice issued, a return of income of any other person respect to his assessable under so and so and so and so. Now, this clause is an independent clause. Now, it's provided that no notice under this section shall be issued unless there is information with the assessing officer which suggests that income chargeable to tax has escaped assessment in the case of assessee for the relevant assessment year. Now, there is double jeopardy here. If you go back to section 147, if any income chargeable to tax in the case of the assessee has escaped assessment, the assessing officer may subject to the provision of section so and so issue. Now, if you look at this section 3, it says in these cases it will be considered that the assessing officer is having income chargeable, information chargeable to assessment. Now we say, provided that no notice shall be issued. Of course, the notice can be issued only when the first clause says that notice has to be issued on that issue. An important change which has been made and probably which has gone unnoticed is this issue and notice. If you look at the earlier act of 2021 and even in 21, the word was serve a notice. Now this has been substituted with issue of a notice. I believe this is outcome of the judgment of the Delhi High Court in the case of Chetan Gupta and earlier, where it has been held that in case a notice 148 notice has been issued before 31st March, it is well within the time, but that does not mean that service is dispensed with. An assessing officer was duty bound to serve the notice before completion of the assessment, maybe after the limitation period, but before assessment. Now that in order to overcome that difficulty, in the 2024, this amendment was made where this word issue a notice has been substituted instead of a service. Now, I believe in case a notice has been issued, even if it has not been served on the assessee before completion of assessment, I believe it will be difficult to rely upon Chetan Gupta and to survive on that part, on that whole issue. Now, coming back to on this issue, the return shall be furnished in the form, such form as may be, and shall apply if the return were furnished. And now a new section has also been, provision has also been added, that in case the return is not furnished within the due time prescribed, it will not be deemed to be a return under section 139. Now, this will overcome the difficulty which department was having, that sometime when the return has been filed belatedly, 143(2) notice was not given. So we were challenging that your assessment is bad in law because I have filed the return. Now it is being said it will not be deemed to be a return under section 139. Now I pose a question. It does not say that return will be invalid. It says not be deemed to be under section 139, which means that assessing officer will be able to take cognizance of that return. That's it, another issue, another challenge, I believe, which will still to be tested, because this provision was introduced in 2024 bill only, act only, and that's, I think, the next issue will come up on that part. But now this makes it mandatory for assessee, the moment he receives 148 notice within the time prescribed, he should file the return on that part, on that issue. This is 148, this is the 18. Now, coming to this time limitation. Now, time limitation has been wavering over a period. Some of my friends of old days, of my age, may be knowing it, that earlier limitation used to be 16 years. At one point of time, it was 16 years. This was reduced to 8 years. Then it was reduced to 4 years, 6 years, and flip-flop has been going on that issues. But when this Finance Act 2021, which has made the major amendment and changed the scheme of 147 to 151, the period was reduced to 6 years. Two blocks were made 3 years and 6 years. Income less than 50 lakhs, then 3 years, and more than 3 years, more than 50 lakhs, 6 years. Now in 2024, again, the revamping has been done, and now it is 3 and 5 years. And we can read this and then look into some of the issue which may arise. Time limit for notice under section 148. No notice under section 148 shall be issued for the relevant assessment year if 3 years and 3 months. 3 years, 3 months have been used mainly for the purpose of meeting the challenge of giving the period of 148A1 inquiry. When you assessing officer issues a notice, you submit a reply and he passes an order. So no notice under section shall be issued if 3 years and 3 months have elapsed from the end of the relevant assessment year, unless the case falls under clause B. And if 3 years and 3 months, but not more than 5 years, 3 months have elapsed from the end of the relevant year, unless the assessing officer has in his possession books of accounts or other document or evidence related to an asset or expansion, so and so, at 50 lakh or more. Now, most important is there are two parts to section 149. Before reading 149.1, one should read 149.2, because 148A will come first and then 148 will come. So now it says, no notice to show cause under section 148A shall be issued for the relevant assessment year if 3 years have elapsed from the end of the relevant assessment year, unless the case falls under clause B. If 3 years, but not more than 5 years have elapsed from the end of the relevant assessment year, unless the income chargeable to tax has escaped assessment as per the information with the assessing year, amount is likely to amount to 50 lakh rupees or more. Meaning thereby, for the purpose of issuing 148A, if the allegation is 50 lakh or more than 3 years, and if the allegation is less than 50 lakh, then it is within 3 years. Now, coming back to issue, 148A is required to be issued in these circumstances. Now you see, out of these 6, these are the 6 cases where 148 for the purpose of section and section, this is that where information will be there. And then you will see that 148 is required to be issued only not in the cases of where 135A is applicable. So this is not required, 135A is to be issued. So now in case a person has not received 148A notice by 31st March and period of 3 or 5 years have elapsed. So 148, where 148A is applicable, proceeding cannot go on and reopen. But in case the issue is of 135A and then 135A, for that 148A is not to be followed, straight away 148 can come with approval. So meaning thereby here it will get 3 years, 3 months and 5 years, 3 months. But in other cases it will be 5 years and 3 years because extended period will not be available because you have to follow the process of 148A, and 148 limitation is clearly here stated that no notice can be issued. Another important point which need to be noticed is that while issuing 148A notice, all that assessing officer requires is unless the income chargeable to tax at per is 50 lakh and more. Having said so, having got the reply in the 148A3 order, he has to make out a case that 50 lakh or more income has escaped assessment beyond 3 years and he has information in his possession, books of account or other document or evidence relating to any asset or expenditure or transaction or entry which show that income chargeable to tax has escaped assessment. I will request my friend to take a note of these two provisions. Initially issuing 148A, all he has to set if income escaped assessment is 50 lakh or more. But while after examining the reply, he has to reach a finding that he has material possession, that this income is because of the books of document, etc., where income has escaped assessment is 50 lakhs or more. Now, you will ask me, how does it make a difference? It does make a difference. Meaning thereby, there is some tangible material in his possession which indicate that what you have stated in your return, what you have done in your return is incorrect, your expenditure is not genuine or something is not correct, or your whatever evidence you are filed that may not be correct. But issue like exemption, deduction, which you have claimed or which are legally debatable issue, they cannot be subject matter of repriem beyond 3 years because it cannot be said that he has in his possession books of account or the document or evidence related to any asset or expenditure or transaction or entry which show that income chargeable to tax escape. Because exemption in case you have claimed under any provision or etc., that cannot be a subject matter of this on that part. This is the important thing which we need to notice it. Now, another thing which is important is under the present Act of 1961, there is no explicit provision that 148 cannot be issued within the assessment year. Now, in the new Act, a specific provision has been part. If you can see on the right side, the green part, no notice under Section 280 shall be issued within 1 year from the end of the tax year. So, end of the tax year, within next year is the assessment year. Tax year is the previous year, and next year is the assessment year. So, it clearly explicitly says that in case your financial year is 26-27, assessment year will be 27-28. In that cases, that notice cannot be issued because you have to file the return by July, August, or October, or December, and then you have a 3 months period window now with the amendment to revise the return after paying certain charges, etc. So that's also a benefit. Another change which you can notice is since assessment year has been substituted with a tax year, and tax year is equal to previous year, so 3 years have become 4 years, and 5 years have become 6 years. This is the change which you can see on the left side as well versus the right side on that part on that issue. Now, this is some of the slide which I need not spend time on that issue, that how to test it. Last date of issuance notice for regular scrutiny and reassessment proceeding for different assessment year. This table gives an idea that at what point of time he can give on that issue. Now, this is another change which I think before I come into this issue, let me come to Now, approval. Now, this is going to be another controversial issue which continue to haunt the department as well as the SSC. As you know that in 2024, by way of I will say simplification, etc. Now earlier there used to be provision 151(1) and 151(2). Approval within 3 years within principal commissioner, beyond 3 years with the principal chief commissioner. Now it says approval will be from the joint commissioner irrespective of the 3 year or 5 years. So they have clearly stated that this approval will be 3 years, 5 years on that basis. But this does not this will create another problem if I come to this is section 152. Now, this section 152 carves out an exception. If you will look at this, because it looks to be a simple mechanism, but subsection 3 and 4 are relevant. Now say where a search has been initiated, because now new scheme, new provision of 2024 of 148 are applicable from 1st September 2024. Period is 3 years, 5 years. Approval is from additional commissioner or joint commissioner. So in case a 148 proceeding is being initiated after 1st September, now this new procedure which I have explained will be applicable. But there are two exceptions which has been carved out. One is very relevant, second may not be so relevant. Subsection 3, if you can read it out. Where a search has been initiated under section 132 or requisition is made under section 132A or a survey is conducted under section 132 on or after 1st April 21 but before 1st September 24, the provision of section 147 to 151 shall apply as they stood immediately before the commencement of the approval. So meaning thereby, as you know, that post 1st April 21, during this period, such cases were also covered in 147. So meaning thereby, you have to issue 147, 149. So wherever a search material is there, etc., then of course, this old provision of 21 to 24 will be applicable. And the major issue was that under this 21 to 24 mechanism, approval beyond 3 years was from principal chief commissioner and within that principal commissioner. So meaning thereby where 148 notices are being issued even after 1st September 2024 because information or material is consequent to a search. Now the old Act 147, 151 will be applicable, all provision, and approval has to be obtained from the principal commissioner or chief commissioner. And in case approval has been obtained from the joint commissioner, etc., that approval will fail. Secondly, it is now mandatory to follow that mechanism. Assessing officer cannot say that I will adopt the new because there is a mandate that this section will be applicable and he will not have a choice that I will not follow this mechanism on this. And accordingly, wherever there is a allegation in respect of a search carried out between 1st April 21 to 1st September 2024 and notice under section 148 is being issued thereafter, assessing officer will be duty bound to say it is a search case, it is a double-edged sword. Assessing officer on this basis get an extended period, not limited to 5 years, but it can be 6 and 10 years depending upon the what here, because 153A and 153C gives an extended period. But another challenge here is coming up is now scope of this section, subsection 3, whether this will be applicable in respect of a assessee who has been searched or will also be applicable in case of assessee who has not been searched but material has been found. Now, in case of course, a person who has been searched, there can be no doubt because it is specifically mentioned. An assessing officer can always say 147, 151 old will apply. Under the old provision of 149, I have a jurisdiction of 10 years in because of 153A gives me 6 years and 10 years. But in case of another person, 153C will be applicable in that. If that is the case, then he will have an extended jurisdiction over 10 years, but with the approval from the commissioner or chief commissioner, as the case may be This is another area which is there. Subsection 4, as I said, not so. It only says it was I believe, a sunset clause that where a notice has already been issued 148A3, that will continue to be governed under the old provision of the section on that part on this issue. Now, this brings me back to (150). This 150 gives an additional leverage to the revenue. If you look at that, this lifts the limitation of section 149. Notwithstanding anything contained in section 149, the notice under section 148 may be issued at any time for the purpose of making an assessment, reassessment, or recomputation, or to give effect to any finding or direction contained in an order passed by an authority in any proceeding under this act by way of appeal reference, or a court in a proceeding under this act or any other law. Then it says the provision of this section shall not apply in any case where the assessment or reassessment is referred in that section related to an assessment year in respect of which an assessment could not have been made. It says the order which is subject matter of appeal, in case on that day itself the limitation was out, then it will not be applicable on that part. So now looking to the time constraint, I am not spending much time, though there is an amendment which has been made here in 150, extend the period of limitation and lifting the 149 period. I am of the view that whatever probably has been tried to made out in the amendment, I think revenue may not be able to take advantage, because this section, subsection 3 is important. For the purpose of subsection 1, notice under section 1 shall be issued within a period of 3 months from the end of the quarter in with a certified copy of the order of the authority, as the case may be received by the jurisdictional principal commissioner or commissioner. So now again it puts a limitation that even when you want to invoke section 150, lifting the limitation, this window will be available only for a period of 3 months from the date when the certified copy is received by the principal commissioner or the commissioner. All that means, it does not mean that 150 you can invoke at any point of time. So department has to be a little bit quick on that part. Now this brings me to section 118, Jao versus Pao. I think let me talk. Now, if you look at this is section 151A. This was enacted in 2021. The central government may make a scheme by notification in the official gazette for the purpose of assessment or recomputation under section so and so, eliminating the interface, optimizing utilization, central government for giving effect to made under notification so and so. So this was fine, 151A. Now, this was the notification which was issued on Jao versus Pao. If you look at this, in this scheme, unless the context otherwise require, Act means the Income Tax Act. Automated allocation means an algorithm for randomized allocation of casing by using suitable technological tool, including artificial intelligence and machine learning with a view to optimize the use. And then scope of the scheme. For the purpose of this scheme, assessment, reassessment or recomputation under section 147 of the Act, issuance of notice under section 148, this is very important, shall be through automated allocation in accordance with the risk management strategy formulated by the board as referred to in section 148 of the Act for issuance of notice, and in a faceless manner to the extent provided in section 144B of the Act as well. So if you look at this, scope of section was 2, assessment and issuance of notice, both was covered. Now, on that basis, the court has taken a view that this scheme having been notified late before the parliament, the notice has to be issued through automated allocation only. And that way, notice issued by the jurisdictional assessing officer, having not been issued through automated allocation, were bad in law and though all were quashed. Now, in that became a word, Jao versus Pao. Now, if you look at this, the new amendment which has been made in section 151A. Where is 151A? 147A. This is. Now, to overcome this challenge which the High Courts have quashed order, this is the amendment which has been made in section 1 by inserting a new section 147. Notwithstanding anything contained in any judgment, order, decree of any court in section 151A or in any scheme framed thereunder for the removal of doubt, it is hereby clarified that the assessing officer for the purposes of section 148 and 148 shall mean and shall always be deemed to have meant to be an assessing officer other than the national assessing officer. So meaning thereby, it nowhere says that jurisdictional assessing officer shall be the assessing officer. It says national faceless assessing officer will not be the assessing officer. Meaning thereby, the FAO will not be the assessing officer. Our contention is, first, this amendment is arbitrary. Retrospectively, you are doing it. And the second point, which is important to come back here on this notification, is the scheme nowhere says assessing officer job versus FAO. It says the allocation has to be automated. Meaning thereby, even if you want to give a case to an assessing officer who is not an assessing officer within the meaning of national faceless assessing officer, such assessing officer cannot be jurisdictional. It has to be by computer to whom it will go. So 148A1 notice, when you want to give over, it should be randomly given. And this has not been overcome by this amendment. So the challenge is this matter came up before the Supreme Court, and that's why the Supreme Court has referred the matter back to the various high courts on challenge the constitutional validity of the amendment or even otherwise other contention. So my suggestion to my all friends who are arguing before the various high courts, etc., is that the focus should be that the word automated allocation has not been deleted and cured, and this issue is squarely covered. If you, I will suggest each one of you, because you are all tax expert, tax practitioner, reading judgment, that in the case of Hexaware, the Bombay High Court has threadbare examined the issue, and exactly what has been done in amendment was the replies submitted by the revenue before the High Court, and High Court has answered, rebutted each and every issue. I can just take you out whether this is the issue, whether the judicial assessing officer can issue notice under section 148, 158 mandate faceless. JAO have no authority to issue 148 notice. Read with the re-certainty mandate. All notice must be issued to the faceless office by them. Once Parliament enacted and CBT notified the statutory mandate so and so, 1000 so and so. And what view has been taken by the Delhi High Court TKS builder against is, I will suggest if you read this judgment, it nowhere addresses the mandate of section 151A as well as the notification issued thereunder. It has gone on other, or I will say other parameters which were not relevant to decide the issue of 151A, and that's why we say that Delhi High Court judgment probably is not a right judgment, and other judgment High Court which are in favor are on the right part on that issue. Having said so, now I think looking to the little time, I may just rush through. Now you will be having one question in your mind. Now what happens to how the procedure is going to be followed after the new act has come into force from 1st April 2026? And on that part, you need to read out the difference. When 1961 Act was enacted and the 1922 Act was repealed, this is the section 297 in 1921 Act. And that makes it. It says, Indian Income Tax Act 1920 is hereby repealed. Notwithstanding the repeal of the Indian Income Tax 1920 referred to, where a return of income has been filed before the commencement of this act by any person for any assessment year, proceeding for the assessment of that person that year may be taken and continued as if the act had not been passed. where a return of income is filed after the commencement of this act, otherwise than in pursuance of a notice under section 34, that was 148 of that year, of the repealed act by any person ending on so and so or any earlier, the assessment of that person shall be made in accordance with the procedures specified in the new act. Any proceeding pending on the commencement before effect will be continued under the old act. And then 148, where in respect of any assessment year, after the year ending on 31st March 1940, that means what 1940 में 34 act है, and then 61, a notice under section of the repealed act has been issued before the commencement of the act, the proceeding in pursuance of such notice may be continued and disposed at had not been passed, and any income chargeable to tax that has escaped assessment within the meaning of that expression in section 147, and no proceeding under section 34 of the repealed act in respect of such income are pending on the same, so it will be under the new act. So meaning there it said all proceedings which have been initiated before 31st March 61, they go under the old and thereafter under new. Now, surprisingly, in this 2025 Act, it says that all provision of old Act will continue to apply. So, meaning thereby, assessment year up to 2026-27 will always be assessed under the old Act, including reassessment. So, be mentally prepared that 1961 Act, whichever I have explained to you, will continue to be applicable at least for next 6 years. So 1932, you assessing officer will have a right to issue a notice for 148 on 26-27. And surprisingly, when assessing officer will be issuing such notice, there can be two assessment year 26-27 and 27-28. There will be two different notices, one under 148, one under the new law. The section. This is going to pose, I believe, a Herculean challenge on that part. That's an issue which will come up on this issue. This is just my analysis. I can skip on the part on a time or time. These are some of the issues which I have touched upon. Reason to believe AO conducts inquiry with prior approval, no mandatory pre-notice inquiries. These are the changes which is there. And then these are a few jurisprudence on the issue. What is the reason to believe and the various judgment on coming on that part. Information received, flagged by RMS, also what is the meaning and whether information should be an information per se, it cannot be the basis for reopening, which I said in the beginning on that part. Now, this is the need for 143.2 requirement in view of the new mechanism on that part. Now, can a reassessment survive where notice under section 140 either issued or served beyond the time limit of 3 months from the end of the financial year which the return is filed? So, where return is filed within time limit, notice was not issued at all or not issued within the prescribed time limit, incurable defect, it goes. In that case, here also, this judgment goes. Now, return filed within time limit, notice issued but not served. In such cases, this challenge can be only when you have raised an objection before the assessing officer. And now with the amendment, if a return has been filed beyond the 3 months, that return will not be deemed to be a return in 139 to 139, and that obviously 143 requirement will not be there. Now, coming to the common pitfall in 148 proceeding. So if you see the left hand side, there is a known supply of complete material. Sometimes assessing officer does not supply the material. He does not give you sufficient time because 7 days time is minimum required under the SOP and as well as 144B. Known application of mind when he passes an order of 148 AD earlier, now 148 A3, the order merely reproduces the notice. These are the common pitfall. Failure to obtain prior approval. So approval is required to be obtained before issuing a notice, and mixing up assessment years. And in order to mitigate this and how to handle this, always begin by examining whether the information falls within the defined category of explanation. You need to vary. Challenge vague or omnibus information. The information must have a specific and direct nexus with the alleged escapement of income. Cross-reference original assessment record to demonstrate that all relevant material was already available and considered during the original proceeding. Raise limitation and section objection upfront. These are judicial and go to the root of the matter. Submit a detailed paragraph-wise reply addressing each allegation, a well-structured response, significantly improve the odds of them. But one caution, don't provide additional information on the basis of which he can make out a case which was not there. Limit the case to the extent to which the issue has been raised in 148A1 notice. Sometime in our eagerness, we provide much more information and then he says this information and he makes out a case against this. And then issue arises, information supplied to you and material available with the assessing officer. Your reply itself becomes a material and then he can use it against you. Now, procedural defense, verify jurisdiction, post examiner, confirm whether notice was issued so and so, check limitation, examine sanction, verify 148 compliance, confirm information validity. There can be issue of change of opinion, no escapement, borrowed satisfaction, not travel back, constitutional challenge, so and so on that part of the issue. This is one issue which is, I think, still wide open. You may be knowing the Jet Airways where assessing of whether in the absence of the addition on the basis of which the assessment was reopened, can any other addition be made? There are judgments from the Bombay High Court and other High Court, Jet Airways, Delhi High Court, and Baxi Laboratory that in case the basis on which the assessment was reopened, that doesn't survive, then any other addition cannot be made. On the applying the same test under the new law also, Delhi High Court in ATS infrastructure has also taken a view that it cannot be done. Though I will still endorse that there is some challenge in the language, because earlier in 147 was also, that word is missing, but still we are of the view that the very basis for holding that in case original assessment was opened was bad, then other addition cannot be made. Interestingly, Delhi High Court recently in the case of Valmik Thapar has gone to that extent, even if the assessing officer has made addition in respect of the issue, which was the subject matter of reopening, but later on that addition stand deleted, then addition, other addition will not survive and that addition has to go. This is very interesting aspect which has come up on that basis of that issue. These are some other slides which I have talked, parameters, extended time, foreign assets, course, etc. I can just on that. Now, these are the expired limitations. Some of the limitation issue which has come up, and particularly in the light of that once a time period has expired, the new amendment cannot extend the period for that purpose on that issue. And this issue has become a little bit relevant here in this case is the approval under section 151 may be invalid in following cases of assessment year 15-16. If the notice under section 148 issued on or before 31st March 21, that is in March, February, then the approval under section 140 would have been obtained from PCIT on the reasoning beyond 4 years. However, due to TOLA, the limitation of joint ammunition grant should extend it. Hence, approval obtained from PCIT has been held to be bad enough. This is a very interesting issue. If you are having 15-16 assessment year and that assessment has been opened on 31st March 21 when TOLA was applicable, then under the old law, assessing officer, because 15-16 time barring was 31st March 24 year, and that period having been extended in TOLA, the approval has to, joint additional commissioner was having still time to grant an approval and PCIT was not having. If the notice issued on or after 1st April, then the reopening at quest applying Rajiv Bansal. 15-16, the revenue has given a concession down. So 15-16 in any case, either under both codes. Same fate happened to 2018-19. If the notice had been issued on or after before 31st March 2022, where that to be within 3 years, an order has been issued on April 22, then approval would have to be obtained from PCIT as extended period will not be available. These are two judgments which are applicable on that point of the issue. These are few cases which I need not discuss. Authentication of the notice, there are some judgments which have said in the absence of signature on notice on 148, absence of signature in 151 approval is not good, but technical issues are there. Delhi High Court probably is not taking a favorable view on this point on this issue. Now, these are some of the key holding on the issue. notice issue under old law deemed to be show cause notice so and so. Let's say Ashish Agarwal judgment. I need not repeat on that issue. This is the table which was given by the ASD in the Rajiv Bansal case, and that's why one can take the benefit of this. Where Tola is not applicable, where Tola is applicable on that part. Then this is also, this gives a answer to the, this is a tabulated form of the issue of how to calculate the surviving period in the light of the Rajiv Bansal judgment on that issue. Now, when I have covered this part of the assessment, I need to touch upon a smaller issue that now with the amendment made by the Finance Act 2026, a window has been opened to file an updated return even after 148 notice has been received. I hope some of my friends may be knowing on that issue. That in case you have received a 148 notice, earlier proceeding were initiated, you were debarred from using this updated return. Now, updated return has been allowed, and if you look at this 139(8)(a) proviso, this is the 8th proviso. Provided also that an updated return may be furnished by a person for the relevant assessment year in pursuance of a notice under section 148 within such period as specified in such notice. In such case, the assessee shall be precluded from filing a return. So instead of filing a regular return, one can file an updated return. And what you need to do is, where an updated return is filed in pursuance of a notice under issue within the period specified, the additional income tax payable under subsection 3 shall be increased by further sum of 10% of the aggregate of tax and interest payable. So all you can get out of this by paying 10%, and on that basis, we just made out a slide that what can happen in case this situation comes up. Now take a case, assessment year 2020-23, you have declared an income of 10 lakh rupees, 1 crore rupees, and your income escaped is 10 lakh rupees. One is you file an updated return voluntarily, say by 31st March 2026. Had you filed voluntary updated return before issue of 148 notice, you would have been required to pay, assuming tax rate is 36%, 3,60,000 rupees. Interest 234B starting from 1st April 22 to 31st March 26 for 48 months, 1,72,000. And then 60% of this in view of 139(8)(a) read with 140B. So 8,52,480. But in case you have not filed and you have received 148 notice, then you can still do it by paying 85,248 extra, and you can get out of this. This is the mechanism. Interestingly, there is another provision which has been introduced by the Finance Act 2000. Earlier, there was immunity from imposition of penalty under section 270A. I hope you are all aware. In 270A, penalty has been now split into two parts. One is where underreporting of income, and then second is underreporting due to misreporting. On simple underreporting, penalty is 50%. On misreporting, it is 200%. However, in case of underreporting, 50% penalty can be waived off. In case you accept the assessment order, you pay the taxes, don't file an appeal, and make an application to the assessing officer that I want to avail this benefit, 50%. Now, Finance Act has gone a step further. Even in the case where there is allegation of what we say misreporting of income, where penalty is leviable at the rate of 200%, you can get immunity from penalty as well as prosecution by paying 100% extra tax. And on that basis, if one want to avail this scheme, in the same example, if you have filed the return voluntary, you would have paid 9,37,200. If you don't avail an immunity scheme, you have not filed, you would be required to pay 12,96,000. But if you avail immunity under 270AA and you pay on 31st March 27, go 1 year more, because 26 you have received a notice, 148. You have filed the same return. Assessing officer will complete the assessment order by 31st March 26, and you need to pay the tax by 30th April. You will be paying this tax, interest, and this will not be required to pay additional because you are not availing 139(8)(a). you will be required to simple pay 100% penalty, which will be equivalent to 100% tax, 9,36,000 rupees. So income reassessment can be now, I think one can handle it out in case one has taken a chance, underreporting, misreporting, still one can get out of on that issue on that part. Srivastava Sahab, should I continue or like, because there are issues that are now just trying to take it on 153A, C, etc. on that issue.
I think Jain Sahib, you can continue for some more time, and then we will have the
All
question
right.
answers. Some issues that
All right.
observations are there of members, and maybe you may complete, and then we will take up these other issues.
Thank you, sir. Thank you. Now, this is the change which just I want by the legend slide I want to show. This is regarding the search matter. Any assessment pursuant to search action initiated on or before 31st March, then the procedure was 153A or 153C. 1st April 21 to 31st August 2024, the search being carried out, then it was 148, which we have discussed about, but there's some ramification we have not discussed about. Post 1st September, the matter has been taken out from the 148, and now there is a window. In my normal discussion, I say search otherwise is bad for a person, but those are lucky where search has been carried out after 1st September, but not before 1st September. Because those where search has been carried out before 31st August, there is no escape route. But after 1st September, there is escape route is as good as amnesty scheme. Just pay 60% tax and get out of it. This is the provision which is there on that issue, on that part. Now, some controversy has arisen on consequent to that also. One controversy which is coming from Madras High Court is that after 1st April 2021, the search provision having been converted into 148 proceeding. So even in 153C, where assessing officer records a satisfaction after 1st April 21, that date will be deemed to be the date of search. And if that be so, that being the deemed date of search, obviously the search provision of that day, that means 148 will be applicable and 153C provision will not be applicable. I think that's another area which has come up on that. Now, these are then another area which controversy is going on in the search matter is that during this period from 1st April 21 to 31st August 2024, in view of the explanation, there was a deemed information that income has escaped assessment and 148 notice was straightaway required to be issued. An issue as a reason, what happened to the year before the year of the search? Year of search, normally 143.2 can move forward. But what happened to the immediate before year, which already was going in scrutiny 143.2? Now, number of judgment has come up from the various benches of the tribunal, starting from Chandigarh in the home life, and then Balbros coming from Delhi, Ludhiana, and then I believe Montage also coming from here, where now the tribunal has held that in all such cases, the assessing officer was duty bound to follow the procedure of 148, and he has completed the assessment under 143.3. Those assessments are bad in law and liable to be questioned. And the reasoning given is also that in 143.3, the approval which is required and mandated in 148 is not there, or that has again become a challenge also. Now, there have been challenges also where assessing officer has written that from time to time I have taken an approval, discussed with assessing JCIT. The courts are taking an adverse view that during the assessment, in case the assessing officer is taking the guidance and approval from the Joint Commissioner, then is an interference in the power of the assessing officer. Section 119 mandate that nobody can interfere in the assessment proceeding. Obtaining approval after he has made up his mind and carried out inquiry is different, and time to time in intervention by the assessing of Joint Commissioner, Additional Commissioner is not permitted under the law. That's again text, but it is contrary to what 153, that issue is there only. Now, the new mechanism applies to owner after 1st September 2024. Block period covers 6 years and plus current years. and separate from regular assessment, and tax and penalty 60% straight away on that part only. And this gives a window because now under this amended law, in case when you are required to file the return and whatever you declare in that return, you just pay 60%, all your penalty get waived off. So this gives a very good option. And if you have looked into the form, which is a written form which has to be filed, is very detailed year to year. You have to tell the source, you have to tell the nature of income, and you have to tell the application. So you can take an advantage. I say by and large, it is just a revival of the settlement procedure, the way we used to make an application for settlement, that this is the income earned this way and that way, and how it has been applied. This gives a very good window for person who has been served on them. So there are some relevant issues which I just take it out. Change of goalposts. Now, court have taken that 148A1 notice which comes, which makes an allegation, assessing officer is duty bound to confine to that only. He cannot make out a new case in 148A3. So these are the 4 judgments from Delhi High Court itself, ATS, Banyan Real Estate, Usha Rani Girdhar and Kachi Probuild, where the court had discussed elaborately what is the meaning of change of goalposts. Assessing officer cannot set up a new case in 148A3 as against 148A1 allegation. Then is relevant date to be considered for date of receipt of direction by AO. So these are the issue where on that issue for the purpose of this. Sumanjit Agarwal is very important for that purpose, which lays down that what is the meaning of issue. Issue means when it goes out of the hand of the assessing officer, and in case an email has been sent, it is only when it is reaching the assessee that will be the issue. Otherwise, on that issue is date of notice under section 148 to be considered deemed date of search for non-search person. So this is also another issue which has come from the Delhi High Court, where it has been held that what happened, because now in between the period 1st April 21 to 31st August, there is no concept of 153C. But now the issue arises is what will be their deemed date of search, so as to apply the 1 plus 6 year period or 1 plus 6 plus 10. For that purpose, the Delhi High Court has said that date of notice under section 148 is to be deemed to be the date of search in the case of other person. Now, section 150 post a discharge bill by observation, the department has been making out a case that even if the CIT appeal or something like not down when saying there is no incriminating material, but with a direction to that for and so, the court has rejected that contention. They said nothing doing in a discharge bill. Well, there is no such finding or observation recorded that you can reinitiate the proceeding within the beyond the limitation period. Section 152 to be considered based on which order date, meaning thereby 1502 say order is not of the assessment order appealed against where this issue has arisen. That is the valid date which has to be applied on that. Reopening based on the risk management strategy, the court has, these are the few judgments which need to be read. Divya Capital is the one basic judgment where the court has said it is not simply the information must be such which indicate yes, income has escaped. And another good judgment is Dr. Matthew Cherian, which has come from Chennai Tribunal. That's another very good, I think Madras High Court, I believe that's a good judgment which has come up. Constitutional validity under consideration. So these are the issue, reopening merely on the basis of RMS. So that question is still pending with the Delhi High Court. And Diksha holding, where we say reopening in the case of a known person merely on the basis of information, even if information is not incriminating. Now these are the issue of change of opinion under new regime. So the court, because one of the view which are being argued by the Revenue Council is that under the amended law, change of opinion which used to be 147 proviso and even otherwise is no more relevant. But the courts have held in no change of opinion is still relevant. If an issue has been examined on the same issue, assessment cannot be reopened. These are the few judgments which have been there. Now, surviving period, of course, one was the issue surviving period, and this issue became more relevant in the case of Ram Balram, because Rajiv Bansal has given a way how the period has to be calculated. But then it was being contended by in the High Court that in view of the proviso to 149, where power is assessing officer get an extended period of 1 month from the end of the month in which the reply is submitted, the court has rejected that. They said no, 149(1) will be subject to this overall limit of 148. That you cannot get an extended period. Reopening on the basis of high value transaction reported in assessee's on record cannot be. That's the same issue. In case it is not incrementing, you cannot do it. Reopening based on investment by foreign company. This is Angli-Tony case judgment from Delhi High Court, where the court has held no, you cannot reopen based on the investment by simply because a foreign company has made an investment in India. So now I think we can just go back and look into 6:30. We can just spend time.
Thank you, Jain sir. Shilpa Gupta, I request you to kindly read the questions which are there in the chat box so that Jain sir can reply to the questions.
Good evening, sir.
Good evening. Good evening.
Sir, thanks a lot for such an insightful session. Sir, everyone, first of all, everyone is asking for PPT, including me.
I will share. I will share. Share the
Sir,
PPT.
please ask the office to share with Gupta sir or Srivastava sir, whatever. Sir, with your kind permission, I'll take the questions of participants, sir. Sir, first question is from Sanjay ji. He is asking what is position after Ashish Agrawal case, assessment year 16-17, income more than 50 lakh and notice was issued on 24/6/21.
Whose question is this?
Sanjay ji. Sanjay
Can I
Singha.
read where it is?
Sir, it's in a question answer box.
Yes, yes.
Chat box.
What is the position after Ashish Agarwal case, assessment year 16, income more than 50 lakh and notice
50
was
lakh and
issued on
notice was-
24?
6/21.
Defaults. Question is not complete. He is not given.
No,
No,
sir,
I can answer. I'm getting it.
He has rewritten
Shilpa
the
ji.
question inside.
I
Okay,
will be
let-
16, 17. See, problem is 16, 17, 50 lakh period will get an extended period, but it will fail on the approval.
Yes,
Because
sir.
16, 17 approval would have been taken from the PCIT, which should have been taken from the PCCIT as income were there. Otherwise, it will fail because survive on that period. And it will fail also on the surviving period.
Yes, sir.
Because
Sir,
notice is on June 4, June 21.
Okay, sir. So, sir, the next question is from Kabir Karyat. I wish to inform the investigation officer inspected wings regarding a person has purchased a property in assessment year 23-23 for rupees 10 lakh but not filed the ITR till today. Whether the assessing officer can make an assessment against that assessee. I think it is time barred. Am I correct, sir? I think the bar is still 3 years from the end of the assessment year.
Where is this question? Who has asked this? Where is
Sir,
it?
Kabir Karyat.
Kabir Karyat. Sir, the third question on fourth question.
Not see to it.
So, I'll read again, sir. Sir, he is asking that
These are in question answer box.
these are in the question answer box, sir.
Question answer box.
Just a minute. Yes. I wish to inform that the investigating officer regarding a person has purchased a property in assessment year 2023 for 10 lakh but not filed the income till today. Whether can make an assessment against the assessee, I think that no. In case till 31st March 26, he had the jurisdiction. If a 148A has been issued before 31st March 2026, then he has a jurisdiction.
Okay, sir.
I believe that's the case. Because 22-23, 3-year period will expire on 31st March 26.
Yes, sir.
I think he has himself made a comment. I think the bar is
Yes, sir.
still
Yes,
3
sir.
years from the end of the
Next,
No, he said, I think it is time barred. No, it is not time barred.
I think the bar is still 3 years. Bar is still 3 years from the end of the relevant year. So थोड़ा language उसने अपने वो इस तरह से लिखी है कि bar is 3 years from the end of the.
In case he has received 148A1 notice before 31st March, by 31st March, then it is within time. If it is beyond that, then it's
31st, then it's not.
Sir, so the next question is from C. Atul Puri. If the notice has only to be issued and serving has been done away with, how will the assessee know when the 30-day period expires?
No, service has not been done away with. I will not say service has not been done away with, because if in case you are able to show that an issue that it was never served, then there is a problem with the department. If the only thing is that earlier there was that there is a mandatory requirement of service, when in any case has to show, demonstrate. Only thing is, in case it has been issued, properly addressed, then probably that will be addressed on the issue.
Okay, sir.
30-day period, which means which 30-day period?
तो सर ये रिटर्न भरने के लिए
Filing
पूछ रहे हैं
I believe filing of return, na? So
हाँ,
obviously,
फाइलिंग ऑफ रिटर्न के लिए पूछ रहे हैं सर ये.
So obviously you will see now, as I understand from the department procedure, and I think we need to be a little bit more vigilant about this.
Yes, sir.
As per my information, what I have been told, that the moment the notice is put on the portal,
Yes.
a immediate SMS, this real-time alert is also sent to the mobile number registered with the department. So service is complete the moment it is put on the portal and the real-time alert is there.
Yes.
So one need to be careful about that also.
Otherwise, he has to file the condemnation. The next question is from Dinesh Kumar Agrawal. A civil subcontractor has shown turnover of 5 crores by executing the work of contractee and payment received through banking channel after deducting proper TDS, and subcontractor also filed GST return, etc. Case was assessed under section 143(3) and AO invoked section 69A on all amount received from contractee, that is 5 crores. AO says that assessee could not explain properly that in actual business is executed. AO discarded the business profit and rejected books. Whether AO can invoke 69A?
I believe this is a issue which is not related, but on tax point I can answer this question. See, this is some challenge with the revenue on that part. Now, addition being made in respect of disallowance of purchases by invoking section 68 or 69, etc. I believe that those sections, 69C particularly, I believe these are not good signs, and this can, I think, revenue can run into difficulty. Now, 69A, in my opinion, cannot be invoked. And day before I was carrying out a search, I could lay my hand at least on 2 judgments, which I can share, where the court has held that 69A is bad and the assessment has been quashed on that point itself. Because in this case, the allegation at best can be that you have unexplained credit, this is not your income, and 68 could have been invoked. So it cannot be that whatever is recorded in the books of account cannot be considered to be unexplained investment or unexplained money. So 69A in any case should not be applicable.
Okay. Sir, this is the question from Amit. Sir, what is your view in case of Hexaware Technologies? What will happen further? Sir, he is asking the fortune of...
Hexaware has 2-3 connotations. On the issue of Yao versus Pao, I think we are reasonably confident that we should be able to meet the challenge of the amendment, because the very basis on the which the Hexaware judgment has been delivered by Bombay High Court has not been done away by this amendment.
Sir, next question is, sir, as notice under section 280-81 is to be issued within 1 year from the end of the tax year, will this result in fast processing of ITR under section 143(1) by CPC?
I don't think this was the meaning which I said it. It only said that within 1 year from the tax year will not be issued, notice will not be issued. 280, 281 are talking of 148. These are 148.
Yes.
If I see section 28 of the new act, it only clarifies that it will not be issued. 1280 is the replica of 148. and 281 is replica of 148A, if I'm correct. So it only says, if you, I think it has been wrongly understood by friend that it, on the contrary, it says कि 140, 280 and 281 notice will not be issued within 1 year from the end of the tax year. So meaning thereby you will not initiate 148. For that purpose, you have 142 one parallel or 143 2 in case return has been filed.
Thank you, sir. Sir, one more question is there from Advocate Mahendra ji. It's a big question. Based on the papers found during the search carried out on 5th February 24 at some XYZ company, alleging escaped income of 11.25 lakh in assessment year 17-18 and rupees 39 lakh in assessment year 18-19. The AO issued a notice under section 148 to the assessee for assessment year 17-18 on 26 March 26. ठीक है. White Finance Act 2/24, that is with effect from 1st September 24, the following amendments have been made. Now the issue in the present case is which law will apply, that is the law on date of issuance of notice, that is 24th March 26, or the pre-amended law will apply in the light of section 152(3) and 152(4).
I don't think there is any change. This is the issue I did discuss, no? See, 152 say in case a search has been carried out during the period from 1st April 21 before 1st September 24, then the provision as they stood before the amendment will be applicable. Now there is a controversy going on whether this provision which I explained will be applicable to the search person or a person other than the search person. So one implication is that this will be applicable on the person search and a person other than the search person. Both it will be applicable on that part.
Yes,
so
sir.
in that view, because he is a person other than the search person, so there is a challenge to him. Yes, it will be applicable, and if it is applicable on that basis, then this notice approval has been obtained from PCCIT, and this is falling within the extended period of 10 years. That will be applicable, but applying the judgment of Justice Singh on that issue, if a notice has been issued on 24th March 26th, so I believe satisfaction would have also been, this will be deemed date of satisfaction. The search year will be 26-27, and when I go back 9 years, because applying that judgment of August.
Yes, sir.
And then this period, I think, which he is talking of, probably may get out, or even otherwise, applying 153C, he may not get the extended period because it is less than 50 lakhs.
Yes, sir. Sir, he's asking the next question from the same issue. He's asking whether section 149(1)(a) will apply to make the total of escaped income exceeding 50 lakhs, particularly when no notice under section 148 is issued for 18-19.
Whether 149A will apply to make the total of escaped income exceeding 50 lakh, particularly when no notice is issued. When no notice has issued, then how he can aggregate? Then he cannot.
Yes, sir. और सर टोटल इनकम तो वैसे भी कैसे बनेगी, क्योंकि एक साल का 11.25 है और नेक्स्ट 39 है, अलग अलग साल है.
उनका कहना यह है 11 + 39 is going to be 50 or 50.25.
नहीं तो फिर तो नहीं होगा इसमें. Sir, next question is for Manoj Kumar ji. In case of a person other than such, notice 148 being issued stating such took place in your case, and then material found in search of X person which pertain to or relate to you, what is the fate of such notice?
Pertain or relate को तो Supreme Court ने clarify कर दिया, that has been clarified that yes, pertain and relate. I think that scope jurisdiction will come. Now you have to see what the content of the notice and the allegation.
Yes, sir. So he is asking again section 148. If return not filed in 3 months, it will not be treated.
I will. If Manoj Kumar is here, I will. Oh, I think you are on webinar. You cannot hear him, no?
Yes, sir. We
I
can.
would have loved to hear from him because there's so many questions coming from him.
Until unless
Ah,
we have to take
better
him
not
on
find-
panel only.
Wait,
Srivastava ji, can you allow him to give the webinars?
Let us see.
I would like to hear it.
कर दिया मनोज
If
मनोज
it is
कुमार
not filed in 3 months, it will not be treated under section 139.
मनोज कुमार अनम्यूट कर लो अपने आप को
Whether assessment or if or rely on, obviously that written will be ignored and then he will be passing an order on 144 only.
Manoj Kumar आ तो गए.
मनोज कुमार can
Manoj, unmute yourself.
unmute
Manoj,
yourself
unmute
please.
yourself. Hello.
Chalo,
Manoj. Let's
Sir, should I
move
go to
ahead.
the-
चलो चलो
Should I go to the next question by the time?
Ah.
Yeah, go ahead.
Sir, so the second last question is from Kabir ji. I think that the assessing officer will assess the income under new income tax act. I think he is giving the answer of Manoj ji. Manoj's questions, he is giving the answer. So I'll go to the next one. Sir, one question in the case where search has been made before 21, but assessee that
Challenge.
search order and do not participated in assessment proceeding till date as he got the stay order. I want to know if that case goes against assessee, that how his reassessment been made in view of current position.
See, the law is very clear. When a stay has been granted by the High Court, from the date it is granted till the date it is vacated, disposed of, that period get excluded and he will have to travel back to the original proceeding under whichever section was applicable at that point of time will be applicable. So he cannot shift the position, current position. He will go back to the original position.
So that's all in question answer box. I think if Manoj ji is there, so he can ask himself.
Shilpa ji,
मनोज do you have any
Shilpa,
other
आप
question?
थोड़ा सा chat
श्रीवास्तव
box-
एक मिनट श्रीवास्तव please. मनोज sir, there is a one question. Hello. Are you able to hear me? हाँ जन साहब, are you able to hear me?
I am able to hear you.
Yeah. There is one question from Mr. S.C. Agarwal who has sent to me directly.
yes.
Whether 148 notice can be issued on the ground that wrong TDS credit was allowed.
I will tell you, under the old law, there used to be one provision on tax also. Fortunately and unfortunately, under the amended law, tax, there is no such provision on tax on the issues. Now,
So there's-
148, I believe TDS credit cannot be because word used is income escaping assessment.
Correct.
Tax escaping assessment is not the word used.
Right.
This is my common knowledge and common sense.
That's
The income escaping assessment, not tax escaping assessment.
Yes, sir. Thanks a lot. You have done very well. May I request my R.D. Kagra to extend a vote of thanks, please? Mr. R.D. Kagra, please.
हाँ बेटे काकर जी अनम्यूट करिए अपने आप को.
Sir, today is a
yes.
very fortunate day for all of us. That on this Bakrid day, you have organized such a beautiful webinar, North Zone. You, Mr. Srivastava ji, BP Gupta Sahab, all are, I congratulate both of you of selecting a very good subject and very good speaker. We have just listened to the Ved Vakya on search and seizure and reassessment of Jainji, who by his name, he is very famous and everyone knows him. And he is the authority of this subject. And you have organized today the Jainji. I am very fortunate and I express my gratitude and to Ved Jainji. Undoubtedly, I have given a 2 days back, I have talked with him. And when I got the information that the North Zone is organizing webinar today, so I came to my good friend Jainji's house, Jainji's office, to hear Ved Vakya on reassessment and such a seizure. Thank you, Ved Jainji.
Thanks, my pleasure. Thanks a lot.
Okay.
Thank you, sir.
Mr. Anuj Bansal, namaskar. Thank you.
Thanks a lot, Jain Sahab. Thanks a lot, everybody. Thanks a lot.
Thank you.
Yeah, Jain Sahab, what is speed? more than 200 delegates have been there at one level. Thanks a lot, Jain sahab. Thanks a lot.
वैद्य जैन साहब को बहुत बहुत नमस्कार और धन्यवाद.
नमस्कार. नहीं
Thank you,
नहीं,
Thank you, Narayan.
we are
एक
grateful to you.
word काकरा जी ने एक वर्ड यूज किया अभी और वो बड़ा इंपॉर्टेंट है और हमारे जहन में रखनी, वेद वाक्य. मतलब इन्होंने क्या वेद वाक्य, मतलब ये दिस इज समथिंग आउट ऑफ द बॉक्स कि साहब इन्होंने जो बोला वेद जी ने, मतलब दिस इज बिकॉज इट इज एन अथॉरिटी इटसेल्फ कि इनके भाषण में और लोग बहुत लोग बात करते हैं, मगर वेद वाक्य जो एक वर्ड नया है, इट इज बीन कॉइन्ड टुडे. आई थिंक ये आगे जैन साहब ये कहीं और फोरम में भी इसकी कभी कभी कोई कहीं चर्चा करेंगे. थैंक यू काकर जी.
जैन साहब पीपीटी भेज दीजिएगा प्लीज. जैन
अभी भेजता हूँ.
पीपीटी ओके. थैंक यू जैन साहब. थैंक यू.
थैंक यू वेरी मच.
Meeting comes to an end.
अखिलेश जी हाँ अनम्यूट कीजिए अपने आप को. अखिलेश जी. हाँ अखिलेश जी मुझे आपसे कुछ और बात करनी है, तो जब भी आप याद हो आप कॉल बैक कर लीजिएगा. समथिंग नॉट रिगार्डिंग दिस मीटिंग, समथिंग डिफरेंट.
मैं बात कर,
जब भी फ्री हो तो बात कर लीजिएगा.
मैं अभी करता हूँ सर थोड़ी देर.
ठीक है. ओके. Thank you. Thanks everyone for attending the program, and we'll continue